Welcome to the Capital News. I am your host, Alex Correttis. Today is May 17th, 2019. Thank you so much for joining me. I hope everyone out there is doing well. Just a real quick note before we get in today's episode. I just want to make everybody aware, especially those who may only listen to the Political Geopolitical podcast, that in episode 71A, today's Political Economic podcast, I mentioned that I had written a letter to the President of the United States. I had just finished that letter. It is posted to the capitalnews.com website, so be sure to check that out, thecapitalnews.com. It is a letter to the president, but the podcast 71A, I actually took the time to read that letter, so if you want a more in-depth analysis of your own on that letter, you just want to read through it a couple times, please do so, and please share it with friends, family, and anybody else you want to. Let's get the word out, and I think it is something that is important, and it is something that needs to be discussed. Our president is up against many obstacles, yet that doesn't excuse him or give him justification for certain behaviors that I have issues with. And of course, those of you who've been following me for a while know what those issues are, particularly those surrounding his daily tweets that, in my opinion, is an abuse of his power because he knows that he is manipulating and moving these stock markets. It's not a one-off. This is nearly every single day and sometimes multiple tweets or statements every day in what can only be construed as a blatant and obvious attempt at moving the markets, typically to the upside, in an attempt to make new highs. So please check out that letter and share it with friends, family, and your community. I would appreciate it. So what happened today in the stock market? The S&P was down 16 points. The Dow lost 98. The NASDAQ closed down 82 points, representing a 1% percentage loss to the downside. In the Russell 2000, the small cap index lost 21 points, representing a decline of 1.4 percentage points. Oil, WTI, is at $62.67 a barrel, and Brent is at $71.94. Not too much movement, still around where they were yesterday. Gold was down slightly, now sits at $1,275 an ounce. Meanwhile, silver continues its slide, losing about a percentage point today, and now sits at $14.45 an ounce. Again, for those of you who are precious metal buyers or who are people who are looking to diversify their overall portfolio, stacking some of the silver might not be a bad play. I know it's something that I do. I think it is a prudent strategy to be diversified. It can help maintain purchasing power. And it's our job of the prudent and wise investor to buy low and to sell high. So with these prices declining, I think it might be a prudent play to do so. The 10-year Treasury also decreased for the day, now sits at 2.393%. So again, we are now below the 2.4 handle that we have been looking at throughout the week. So the VIX, the volatility index, gained 4 percentage points today, now sits at $15.96. So, quite the roller coaster of a week, quite the roller coaster of a day. On Wall Street, we had news coming out from the Asian markets that sort of moved the markets to the downside for the day. However, there was some news on the U.S. front that was able to allow the major indices to reverse and trade pretty much throughout the entirety of the afternoon to the upside before returning and reverting course, closing down for the day. Well, that news was primarily concerned about the U.S. consumer sentiment hitting a 15-year high. So quite the difference from some of the other economic news that we have been discussing here, isn't it? This, of course, is the consumer sentiment survey that is put together by the University of Michigan. It is something that is highly watched. Now, I do believe most of the data that was collected was prior to the president's recent escalation in the trade war. So probably this was increased artificially by the president's tweets, the same song and dance that he is doing with the stock market. People want to listen to this president. They want to believe this president. They want to trust this president. And when they have been told, when we have been told repeatedly for several months by the president and many members of his administration that a deal was forthcoming and now we are escalating, it's going to be interesting to see how the University of Michigan's Consumer Sentiment Survey shows. at the end of the month and how it moves forward while we're in the midst of an escalating trade war. Now, some of the news that broke from Asia was basically regarding the Chinese looking to play the long game, digging their heels in, saying we're in no hurry, no big deal, saying the following: the trade war with the United States will only make China stronger and will never bring the country to its knees. This is from the ruling Communist Party's People's Daily. That's their newspaper. So, Mr. President, you can play the strong man, but so can President Xi. And it looks, at least for right now, that is the case. We are also hearing that the trade talks are in flux, that there is nothing major that has changed in the course of this past week. So are new talks or another round of talks going to take place? That remains up in the air. What this did to the Asian markets last night was the following. The Japanese markets were able to sort of shrug this off on some other news. I think this was probably more on the hopes that the United States will not be imposing tariffs on the auto sector. So the Nikkei, the Japanese market, was able to gain a couple hundred points, representing a 1% increase. However, the Chinese markets sold off. The Shanghai Composite lost 73 points, representing 2.5 percentage points. 2.5 percentage points, which was also consistent with some of their other indices. The Hang Seng, the Hong Kong Exchange, lost over 300 points, representing a 1% decline. So it's interesting to see, folks. You got a couple strongmen playing the strongman role. Who will blink first? Is anybody in a hurry? Well, according to some of the tweets from the President of the United States, no, we're not in any hurry. There's no rush. Of course, he wants to egg on the Chinese and say, look, you better come back to the negotiating table and strike a deal, because the longer you wait, the worse it will be for the Chinese economy. Now, I happen to believe that there's a lot of truth in that statement. But nevertheless, the Chinese, I don't believe, think that the president is correct in that analysis. I think the Chinese think that they can probably weather this storm for as long as necessary. Now, it's not easy to pick up a consumer such as the United States, but a lot of business hasn't been completely stopped. This is really just the first round of escalation. Will it get worse? We've talked about what the Chinese can do. We've talked about what the United States can do to China. If it starts to get pretty nasty, we will know by some of those other tactics that will be employed by either side. I hope it doesn't come to that. I really hope it doesn't, because that will put a major wrench into the gears of the economy. Now, this is not a great economy. The Chinese economy is not a great economy. All the more reason to be very careful here, because it's not going to take much to put either economy, particularly that of the United States, into recession. Because we have a, quote, right now, 3.2% GDP growth rate, according to Q1 figures, but the Chinese are still growing at 6%, so they're double us. So to say that the Chinese will end up in recession, at least technically speaking, is harder to fathom, but it is not an impossibility by any means. They are bloating their figures as well. They are communists. It is state capitalism, or whatever they want to use to describe how they function as a country, as a people, as an economy. Now, some of the other news that was quote-unquote positive for the week, or at least the past couple days, was the president in the United States thinking, well, you know what, we're not going to increase tariffs on the auto industry and some of the auto parts that are coming primarily from the European Union. However, we had a statement from the president today saying that, you know what, the European Union rips us off worse than the Chinese do. I mean, you can't make this stuff up. It's somewhat comical. You have to laugh to some degree. However, the deadline to make a decision is tomorrow, Saturday, May 18th. I'm not going to sit here and tell you what's going to happen, because the president comes out of nowhere and makes tweets and makes policies via Twitter. So I don't know what he's going to do. Again, we do these podcasts later in the evening. I mean, he could be tweeting at 2, 3 in the morning. I just couldn't tell you what's going to happen. Will he increase tariffs on EU automobiles, on Japanese automobiles, and auto parts? Remains to be seen. But we do know, because it remains to be seen, and given the comments from the Chinese, that the European markets did the following. So if we look at the British FTSE, we have them down 15 points, which represents about a 0.2%. We have the DAX, the German index, which was down over 100 points, representing 0.9%. The CAC, the French markets, were down 0.5 percentage point. And the Italians and the Spanish were down about 0.2 percentage points for the day. So clearly the main economies within the European Union did not like the news, rightly so, particularly that of Germany. They are a mega producer of automobiles. They manufacture quite a quality product. They're known for their automobiles. They know that that is a main driver of their economy. And they are on the brink of recession themselves, that being Germany. Actually, the entire European Union is on the brink of economic slowdown, which is why we continue to see rhetoric and policy from the ECB, the European Central Bank, and its policymakers coming out and saying, well, we're just going to continue with our version of quantitative easing. We are going to continue with negative interest rates. I hope and pray that negative interest rates do not come to the United States, although it is quite the possibility. Most definitely, if we should end up in a recession. And the more severe the recession, the more likely that outcome would be, because it will be lower interest rates. No question about that. Will they go negative is a question, but quite possibly. And then quantitative easing will take shape in another form. You can bet your bottom dollar on that one. Now, of course, those are the same types of policies that the President of the United States is calling on at a time when he also says the economy has never been better. So again, these are contradictory statements, but this is how the President does business. It's not a good way to do it, but this is what he's doing. Again, we think this has to deal with him trying to dance himself out of the box he has placed him in by taking title to both the economy and the stock market. And if it turns down, which it will at some point, he is looking for an avenue to blame somebody else. In other news, which is a little bit political, but sometimes we also talk about Brexit here as well, that deal, again, remains in shambles. We have a breakdown in the talks between the Conservative Party, that of the Prime Minister Theresa May, and that of the Labour Party. So talks are pretty much broken down between Theresa May and Jeremy Corbyn, the leader of the Labour Party. We also know that just only in a couple of weeks, I believe on June 5th, that the Prime Minister's deal for Brexit will go back to another vote before Parliament for the fourth time since the beginning of the year, which means it got shot down 3 separate times. Will it pass the fourth? Probably not. Could it? Of course it could. Could there be some backroom deals? Absolutely. Could there be some last-minute turnarounds? Absolutely. But given the course of action, given what we have seen, it's most likely going to be shot down. And of course, now there are increased calls for the Prime Minister to resign. She has admitted that she will resign, especially if her deal gets struck down for the 4th time. So that will throw a big wrench into that system. This will cause greater uncertainty within the markets. And we are seeing right now a continual and a steady decline in the strength of the British pound. Not too long ago, it was £1.31 to the US dollar. Now it is £1.27 to the US dollar. So quite the drop. And again, for those of you who may not pay attention to the currency market, you say, well, Alex, that's only 4 cents. It is only 4 cents, but that is a big move in the currency market, especially over a very short time. Also, with our friends down under in Australia, the Australian dollar, I believe, has hit 3-year lows against the US dollar. This is on the back of an escalation in the trade war. This is also in part because their central bank, the Reserve Bank of Australia, has started to hint that, you know what, there is some softening in the Australian economy. And if we are going to move to lower interest rates, which are already at historic lows in the land down under, we will be looking and making that determination primarily off of the back of employment figures. Well, the most recent employment figures that came out showed an increase in the unemployment rate, and therefore markets are anticipating that the Reserve Bank of Australia will lower their interest rates, thus putting downward pressure on the Aussie. We'll see what happens, but this is no surprise to us here at the Capital News. We've been talking about fragile economies the world over. We've been saying that the Australian economy has been able to, avert a recession for a generation, 20-some years, because they are well endowed with natural resources, and their main trading partners are China. And now you have India growing, the Japanese, you have all of Southeast Asia, and so they've been able to skirt a recession. Now, with everything starting to slow down globally, including this time China, you are starting to see that ripple effect starting to affect the Australian economy. Same news with Canada. There's a lot of similarities between those economies, so you can almost use them interchangeably because they are sort of in the midst of suffering from the same types of consequences of their policies over the past couple of decades. You're going to see probably greater depreciation in their housing markets, which will cause bigger ripple effects throughout the entirety of both of those economies. You'll likely see weakness in their respective currencies. You may see them enter recession. Could those countries entering recession before other major industrialized economies be the first domino to go? Yes, it could. But time will play out. Now, I know it's Friday. I'm going to let you guys go early, but this has been quite the roller coaster ride of a week in the markets. I anticipate this will be the status quo for the time being until and unless, we still don't know if this is going to be for certain, if President Trump and President Xi of China meet in next month's G20 meeting in Japan. But stay tuned, folks. It's getting exciting. Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. This is the Capital News. I am Alex Koritis. Have a great weekend. Godspeed.